Hi guys, it's Ariel
And Jason.
from Fix My Books, and today we are doing part 3 on how to close a CCPC, which is all about settling your financial obligations.
So quite a serious one.
Yeah, I would say this and the next one would be the most important parts.
Yeah, the other one is just document stuff, but
Yeah.
this is a lot more serious.
Okay. So these are the topics that we are going to be covering today. So number 1 is paying off all outstanding debts and liabilities.
Number 2, notifying creditors of the corporation's intention to dissolve.
Number 3 is distribute any remaining assets to shareholders according to their shareholdings.
Number 4, prepare a statement of distribution of assets.
Okay, so number 1, pay off all outstanding debts and liabilities. So some steps to identify and settle debts and liabilities would be to conduct a thorough review of the corporation's financial record. So this would probably all be in your balance sheet, like your accounts payable, loan agreements, and any other outstanding obligations. So you should contact all known creditors to confirm the amounts owed and arrange for payment. Ensure that all your payroll obligations, including employee wages, benefits, and any outstanding taxes, are settled, and review any contracts or leases to determine if there are any termination fees or other obligations that need to be addressed. You can't just like cancel a lease if there's, still 3 years left on it.
That can be quite a big one. So a lot of people find out after they've terminated something that, oh wait, I have to pay this large exit fee or something like that. So before you close off any contracts, read the agreements and then try to negotiate those sort of things away.
Okay. So documentation required. So obtain receipts or statements from creditors confirming that debts have been paid in full. Keep copies of bank statements showing payments made to settle liabilities, and maintain records of any correspondence with creditors regarding the settlement of debt. So if they say, oh, we would usually, let's say, charge a fee of 10 grand to terminate early, but since you let us know in advance, we'll only charge you 5. Like, keep records of that so that they can't come back and say, oh, you only paid 5 when the termination fee is 10, and it's like, oh, but you said.
If you've got any loan discharge documents, anything like that, keep those, because you may need those. Even if you don't need them at the time, it may come up later, so always keep them in your package that you keep at the end when you close off the corporation. Legal and tax considerations. So ensure compliance with the ITA Income Tax Act, particularly regarding the payment of any outstanding taxes, including income tax, GST, HST, and payroll taxes. So GST, HST, and payroll taxes, those are important because, they're all important, but they're slightly different because those are trust accounts held with the government. So the money, you'll be personally liable for this money if it's not paid. The corporation's income tax, that's slightly different, so falls under completely different situation, but make sure you pay these. So next, obtain a clearance certificate from the CRA to certify that all taxes have been paid or that acceptable security has been provided before distributing any property under the representative's control. Be aware that failure to obtain a clearance certificate before distributing the property can result in personal liability for unpaid taxes. So this is very similar to an estate where, say you have an executor on the estate or a trust where you have a trustee and they're closing, or fiduciary, and say that, okay, someone's passed away, there's assets in the estate, and then you get all the beneficiaries, so the family members wanting the assets straight away, but you need to make sure that all the taxes are paid and the clearance certificate has been given by the tax department, because otherwise what will happen is the person that's in charge of distributing this property is going to be on the hook for any unpaid taxes. And this is actually much more common than people think, because people want at the money so quickly and they're not thinking about the processes and procedures and everything that can go on, and it can be delayed sometimes because things need to be reviewed. So just make sure you follow this step get the clearance certificate before distributing any property.
So next is you need to notify your creditors of the corporation's intent to dissolve. So you should send a formal written notice to all known creditors informing them of the corporation's intent to dissolve, and the notice should be sent well in advance of the planned dissolution date to allow creditors sufficient time to submit any claims. This is not like, oh, we want to dissolve tomorrow so that you can't claim anything against the corporation.
Next week we're closing off everything. No, don't be that person. 6 months is, I think that's plenty of time. I think that's around the mark that you should be aiming for.
Again, this
6 months.
This would all depend. You need to read whatever is in your shareholders agreement and bylaws and things like that.
It's going to be really dependent on your own situation here, but don't do it like the week before you're just closing everything off. Because if you do owe money, then they're still going to go after you, right? Yeah.
So just be aware, all of this depends on your personal situation. Again, this is not legal advice. This is us just, general information purposes. So you have some idea of what this would entail should you embark on this journey of closing a corporation.
Yeah, so when you go to a lawyer, okay, this is the next step. I kind of know a bit about this and what needs to happen.
Okay.
Information to include in the notification. The corporation's name and business number, so obviously standard, the intention to dissolve the corporation and the proposed date of the dissolution, so we've covered this in the last video, instructions for creditors to submit any claims against the corporation, including the deadline for submission and the address to which claims should be sent, and contact information for a representative of the corporation who can address any questions or concerns.
So legal requirements and best practices ensure that the notification complies with any specific requirements set out in the corporation's incorporating statute or relevant provincial legislation. Consider publishing a notice in the local newspaper or public forum to reach any unknown creditors, and keep records of all notifications sent and any responses received from creditors. Again, this would depend on your corporation's statute and your provincial legislation. This is just for general information purposes, so you really need to double check these things before you make any moves.
Yeah, definitely consult a lawyer on this. So distribute any remaining assets to shareholders according to their shareholdings. Valuing and distributing remaining assets. Conduct a final valuation of the corporation's assets, including real property, equipment, inventory, and any other tangible or intangible assets. So inventory you can kind of usually value based on what you've been selling this at or quick sell price. However, things like real property and equipment, you may need to get a valuer in. Alternatively, you may need to get some valuations done based on comparables that are in a live marketplace. So, for example, if some sort of equipment like a car is being sold, like market rates of the car, or get a valuation of the car.
How about intangibles? Like, what if you have a trademark?
Yeah, so those sort of things you would need to go to a person that values these sort of items specifically. You wouldn't just estimate, $1 million. Yeah, $1 million for this. But then again, if you got your company trademarked, but it's not even a well-known company, it's just a very, very small company, then perhaps the valuation that you're thinking, where it's like very high, it may not be as high as you think it is. So you don't want it to be high either in a situation like that. So prepare detailed inventory of the assets and their respective values. So again, go to a valuer if you need to.
Get
professional help with this, because you can't just assume the valuation of assets. Distribute the assets to the shareholders in accordance with their shareholding. Ensure that the distribution is fair and equitable.
Okay, what if, let's say you have real property and then you're like, I just want to value this at $1. Can you do that?
Well, you're going to get in a lot of trouble. And, also because that's going to be sort of a constructive benefit to a shareholder.
Okay.
it's not going to be in their favor either. So if the shareholder, for example, received like $1 million property, a value of $1, not only is that grossly misvalued, right, which probably would make it illegal, they're also, when they sell that property, their adjusted cost basis of that property is $1. So they're going to have to pay the full capital gains tax on that anyway when they sell it. So it's not even favorable to them.
Okay.
Yeah,
just things I'm wondering as we go through this. Okay, so documentation required. So prepare a resolution of the board of directors authorizing the distribution of assets to shareholders, maintain records of the valuation of assets and the method used to determine their fair market value.
So that's why you should go to a professional, because then you could just cite them.
Okay. Obtain signed receipts from shareholders acknowledging the assets that they have received. Not bad.
Yeah, that's also important. So otherwise they can claim that they never actually received the asset.
Okay. Good to know. Okay.
So tax implications for shareholders. Number 1, shareholders may be subject to capital gains tax on the value of the asset received. So just like I said before, depending on the difference between the fair market value of the assets and the adjusted cost base of their shares. So this is also the other issue. So if they're receiving some sort of asset which is valued at like $1 million, but they spent $100 on the shares, something like, well, just make it easy, $100,000 on the shares, then they've got a difference of 900,000. So they've got a gain there of 900,000. The corporation should issue T5 slips to shareholders for any dividends deemed to have been paid as part of the distribution. So that's usually from the remaining cash balances and retained earnings. And number 3, consider consulting with a tax advisor to ensure compliance with all tax reporting requirements. So again, always consult a professional.
Mm-hmm. Okay, so next you have to prepare a statement of distribution of assets. So information to include would be a detailed list of all assets distributed, including their descriptions and fair market values, the names and addresses of shareholders who received the assets, the date of distribution and methods used to determine the value of the assets. And, obviously the statement has to be super legit. Like, you have to have this prepared by a professional and also signed. So it should be prepared by the corporation's accountant or another qualified professional. It should be reviewed and approved by the board of directors, and the statement should be signed by an authorized officer of the corporation, such as the president or treasurer.
And when you're starting off doing this, because you're having to make these big lists of assets, sometimes you may have dozens and dozens, thousands of assets, like inventory in your business.
Computers.
Do all of this in a spreadsheet first before you just try to write it on paper. Otherwise, you're going to get lost.
Yeah. Okay.
Legal requirements and regulatory requirements. Retain the statement of distribution of assets as part of the corporation's permanent record. So as we always said before, keeping these records in just one place after the company is dissolved. So if you need to go back to them, they're all just in one place. There may be specific filing requirements with the provincial or federal corporate registry, depending on your jurisdiction, and ensure compliance with any additional requirements set out in the corporation's incorporating statute or relevant provincial legislation.
Again, this would all depend on your situation. This is not legal advice. It's just for general information purposes. And you can see here that you really need to double check a lot of these things. It's not just we're just gonna do this because I think it complies. It's it may comply with one thing but not another, so you have to double check all these things.
Yeah, so you usually get what you pay for, right? And we say this a lot with accounting and bookkeeping. If you pay someone to do it and you pay them a fair amount of money, they're probably
know what they're doing.
More likely than not know what they're doing. And it's the same thing with legal advice. So if we ever need legal advice, or if we need to consult a lawyer, we always just go consult with a lawyer. There's many times we've consulted with lawyers, and it can cost you thousands of dollars, and you may not end up with anything that you didn't already know, but at least it's reiterated that you are on the right track.
Yeah. So this is part 3, settling the financial obligations, and the next one will be part 4, which is filing the final tax returns. I would say part 3 and 4 is the most important parts of this whole 6-part series, just because that's the more of like things you need to do. The others are more of like documents you just need to have in this whole series.
Yeah, you don't want to leave out doing these because you can't really, I mean,
close a corporation.
Yeah, you can't close a corporation as easily without actually doing these steps. The other ones, the documents, you can have those made for you.
Yeah. Okay, so once again, this is Ariel.
And Jason.
With Fix My Books. Hope you guys learned something and have a great day.
Thanks.